Welcome to the Income Cycles podcast, the place to discover how to get returns like the professionals as an average person in the property, forex, and crypto markets. And now over to your host, Mark Vernham.
Hello everyone, it's Mark Vernham here and welcome along to this week's edition of the Income Cycles podcast. In this week's show, we'll talk about, is it better to buy Bitcoin or gold? We certainly see some big gains in January on both of those asset classes. So we're going to have a look at, is it a good time to buy Bitcoin or is it a good time to buy gold or buy neither? We're going to be looking at that in this week's debrief. We're also going to be covering some income news that caught my eye this week in the UK property, forex and crypto markets. And also stay tuned towards the end as I'm going to give you an Income Cycles extra resource to help you manage your Bitcoins and other digital currencies if you've got some in a much easier way. So straight into the news this week, income news that caught my attention this week in the UK property market. We saw industrial property values fall by 26% in 6 months, according to realassetsipe.com, a real catchy domain name they got there. But essentially they said that the UK industrial property market experienced the fastest ever correction in the second half of 2022, and capital values fell by 26% from July to December last year, essentially saying that the head of the economic research data, Tom Lee, he said that they've never seen such recorded loss in such a short time. Overall, commercial property values fell by 12.8% in the fourth quarter alone, according to the index. So why is that important? Why did it catch my eye? Well, I think essentially there's kind of some interesting news saying that if commercial values are going down in property, that could mean that there is a slowdown in economic demand for whatever the industrial units are being used for. So, if it's Amazon or light industrial or retail, whatever, then obviously as a result of that, there's not the demand. So if the demand is starting to slow, that would really point to me that there could be this recession really starting to slowly kick in. That could be one of the early signs, of course. No one knows for sure, but that's certainly a data point I'll be keeping an eye on to see what happens there, because the first thing that's going to slow is commercial. Obviously, the jobs market is still really strong at the moment. Obviously, as the commercial property slows, the industrial availability and demand for products slows, and then the jobs will start to slow down, and obviously unemployment will start to get bigger. So watch this space, because that's something I'll be keeping an eye on. If we look into the FX markets, good old Daily Mail here comes out with Bank of England hits a 15-year high of 4% to pile misery on mortgage payments, but hints it might have peaked with inflation and downgrading its recession forecast. So those of you who are in the know and follow this stuff, we saw obviously Bank of England last week raised their interest rates to a 15-year high of 4%. It's not as high as they thought. They thought they were going to actually have to do it a lot higher, because they believe that inflation has peaked, and the kind of big spike that we've seen now, what they're doing is correcting that, and it's certainly showing signs that it's getting it under control and they're starting to turn the corner. I think they may be slightly misguided, but I'm not the job there of the Bank of England. It's good old Mr. Andrew Bailey's job. But essentially, the bank is saying that it's sharply downgraded its dire estimates about the economy, although it still predicts a shallow recession, basically saying that it now believes that the bank is saying that essentially last time they were thinking it was going to last 8 quarters, the recession. Now they believe it's only going to be 5 quarters. I don't know how they can predict such precision, let's call it that, in that particular timing. And I guess you'd argue they've maybe not hit their inflation target for a number of years. So what makes them think they're going to sort of be able to control this? Obviously, lots of factors go into that. It's not just the Bank of England, it's the government, etc. as well. But the interesting point here, I like that Mr. Bailey, Governor of Bank of England, pointed to the huge rise in economic inactivity over 50-year-olds after COVID, warning there was little sign so far for people returning to work. So Mr. Bailey is throwing anyone over 50 under the bus, saying it's your fault that we're in this recession because you haven't gone back to work. So thanks for that, Mr. Bailey. I'm sure you're going to win lots of friends there. But also, meanwhile, the International Monetary Fund weighed in here and said that, to pile more bad news on, essentially that the UK would only be the only major economy in recession this year, with the actual business of the UK, the economic set to contract by just over 0.5%. So out of all the countries out there, including Russia, believe it or not, the IMF are saying that it believes the UK will be the only major economy that is going to have a fall this year. So thanks for that as well. So very interesting time if you're being a proud to be British person, and Brexit and all the things that were meant there. That's obviously working out really well for us on that side. So I'll let you come to your own conclusions on that one, but there we go. Into crypto news, we're seeing here good old BBC. There was an interesting headline that caught my eye here, was Elon Musk loses 146 million on Bitcoin. Any headline that had Elon Musk in it nowadays seems to capture everyone's attention. This one caught my attention because it said Tesla made a £140 million loss on its Bitcoin investments last year, according to its filing. It told the US regulator it lost 204 on Bitcoin overall million, and gained back 64 million through trading, which is not too bad, I guess. But essentially, it put in 1.5 billion into Bitcoin in early 2021. And Elon Musk, as some of you may remember, said we're going to take Bitcoin for Tesla cars in payment for all the payment. Changed its mind a few weeks later, and since has sold most of its Bitcoin holdings. It now holds 184 million. So that's a fairly substantial amount of Bitcoin that it sold. Now, that may seem kind of quite shocking, but actually, if you look into the balance sheet of Tesla, which I did, I had a quick look, essentially, how much money does it have on hand? Well, cash on hand in the quarter ending December of last year was 21.0 billion, so 21 billion, let's keep it simple, a 31% increase year on year. So its cash on hand actually was 17 billion it actually had available, an 8% down climb for last year. So what does all that mean? Well, essentially, if you just factor in it losing that amount of money on Bitcoin, which was that magical 140 million that captures everyone's attention, in reality, it only lost just under or just over 0.5%, 0.7% of its cash in the bank. So you could argue inflation's done worse than that in what it's doing there. So just always question the headline behind the headline, if that makes sense, which is what I always do with the news. And I hope you'll find it useful as I pinpoint these things out and get you to look behind the news and pull back the curtain on some of these wonderful headlines that are out there. Okay, so into this week's Income Cycles debrief. And it's a question I get asked a lot, certainly in the last month or so, is it a good time to buy gold or Bitcoin, or either, or both, or neither? Kind of like, which one should I do, Mark? Because, they've both risen. As soon as anything rises, suddenly it gets lots of attention, lots of people talking about why Bitcoin's good to buy, why it's not, why gold's good to buy, why you should do it, etc., etc. So in this debrief, we're going to haggle and look at all this stuff and go into the data and see what's going on. So let's have a look here. So the Bitcoin versus gold debate has been heating up again. And certainly people like Goldman Sachs have released a document I noticed that came out that said gold was actually a better investment than Bitcoin, it believes. I think it really depends on what camp you're in as to which one you believe as to a better Bitcoin, and whether you're a Bitcoin person or a gold person, and maybe you're kind of in the middle. I guess I'm kind of the age where I'm in the middle, that I understand enough about Bitcoin and I hold some. I also understand kind of gold and hold some physical gold. And here's the thing for this: a lot of people say they're in gold, and in reality they're not. They're trading gold in some way, shape or forms in a EFT fund or a tracker fund or whatever. And very, very, very few people I know are actually physically holding gold. I've got one very good friend who holds a lot of physical gold in vaults and in his back garden, etc., hidden away. So I think when people say they're in gold, just check, are you really in gold or are you seeing it, which is what Goldman Sachs said in their report. It basically seems that, it's being in a market of actually trading it, not actually in it. So it's performing more like a currency now. The same with Bitcoin. They're not actual kind of physical hold assets in a lot of things. There's been so much diversification in how the thing is produced, if that makes sense, and put out to the market with all the different instruments and ways to buy it, that actually in most cases, like, we've lost sight of what the actual thing is. And certainly with gold, that's very much the case. I speak to many, many people who say, I'm in gold, I'm covered, I'm all right with gold. And when you actually ask them, is it physical gold? The answer is no, it's some sort of mechanism that's trading gold or tracking gold or whatever, the gold price. So I would believe, this argument is really true of if you are physically looking to buy gold, then buy gold, physical gold, because that actually has an inherent asset value, which is kind of different to Bitcoin, which doesn't have a direct asset value, and I think a lot of people believe that Bitcoin was the new gold as it was once being heralded. I don't believe it is. I think it's starting to perform as another currency, but as we get mass adoption and we get a mass adoption cycle, which I talk about in the Income Cycles Foundation series on Bitcoin, there's one of those coming soon about Bitcoin. Once we get this mass adoption cycle in Bitcoin, that's then when it really gets the stability in the pricing, and we start to see a lot more stuff happening there. But essentially, Goldman Sachs in this report, which I found quite interesting, said there's just too much speculation around Bitcoin, and I tend to agree. I think, personally, on top of that, the original cryptocurrency has failed to deliver on a lot of promises that it thought of, because it was always going to be seen as like a anti-trust, anti-thing outside the system that was going to produce and maintain. And I guess, the problem in that is that it was going to act as a hedge against inflation. And obviously, as we know, last year it dropped some massive drops, but if we just summarise overall, about 30% down, but then conversely 30% up in January. So it's very interesting when you look at like any other asset value. If it went down 30% in a month and back up again 30% in a month, all hell would break loose. But Bitcoin, because it's so young, and obviously doesn't have any regulatory controls, which is another thing that's going to impact the actual cycle of this and where you can kind of get in and profit from it. Ultimately, it's something that has a lot of extreme market volatility, and if you enjoy that, like I sort of say to people, if you enjoy the big sort of rides at the Florida theme parks or Alton Towers or whatever, then Bitcoin could be an interesting one for you, because you can make money, but be prepared to log into your account one day, and it could go down 10-20%, but then could pick up the same day the next, or maybe stay there for a month or two. Do I think we're outside the crypto winter as it was known? Not sure yet. I think it's still got a bigger knock-on effect with all the FTX exchange, etc., and all the other places going down. We call this ripple effect. I think we're still feeling that, but ultimately Bitcoin kind of so far hasn't delivered really on its promises, and ultimately it's still kind of having extreme market volatility, and it's not performing as once it was, which was, this is kind of a safe haven, a bit like a new gold, and ultimately kind of protecting you. So if we look at the case against Bitcoin, essentially it's trading like a high risk, high growth tech company stock, really, because it's jumping around a lot, certainly more than a tech stock, more than your Amazons and places like that. But ultimately it's certainly jumping around all over the place, and it's still behaving like a startup if it was a business. And I think that's what a lot of people forget when it comes to digital currencies, or even some of mainly the coins. Like, what's their actual purpose? Why are they there? Because I know so many people who are in the finance sort of business and marketing business, sales business, who just come up with their own coin, and there's no inherent value to it. I was speaking with a company the other day who had issues in banking, so instead of sorting out their banking issues to make their business kind of solvent, they just decided to flip it and turn it into this digital currency, thinking it will solve the problem. And actually now they've got kind of two problems on their hands, because they're trying to manage the supply and demand of the coin, and also kind of ensure that it doesn't just lose all its value and go under, and then they're in trouble. So it's kind of a problem. But certainly when you look at just Bitcoin on its own, during bear markets, you'll find that most investors typically seek out less risky assets. So as we are at the moment, certain asset stocks are going into bear market. The property markets in the UK are starting to see that turn now and go negative. Certainly things like the S&P 500, FTSE 100. Yes, we've seen some big gains literally last week, but overall last year they were down. So a lot of people then kind of look to gold and less risky assets like gold, and obviously Bitcoin potentially. A primary argument for Bitcoin, of course, was that its past significantly delivered much higher returns than anything else. If we look back over 10 years, from 2011 to 2021, it was by far and away the top performing asset in the world, delivering returns of 230% every year as an average, far exceeded the performance of high-tech growth stocks by a factor of 10. So, massive returns, and that's obviously why it gained a lot of news and people talking to you about it down the pub or over family meals. You got some Bitcoin, when we were seeing crazy amounts. But, overall, it's returned 17,000% to its investors in that 10-year period. So, imagine that if you bought a property and it returned 17,000% return, I think you'd be absolutely delighted. So there is, a good point to that, whilst past performance isn't a future indication of what can happen in the future, it certainly has got a strong argument that, well, hold on a minute, yes, it's very volatile, but it's made good money, amazing returns. If you contrast that with gold, that's delivered very, very shorter, longer term, its annualized return for the same 10-year period was only 1.5%. So much slower, much less risky, much less volatile, but only returned 1.5%. So you can argue Bitcoin, well, if you just want return, Bitcoin's where your money's got to be, surely, ultimately. And I think, until 2022, investors thought they were getting the best of both worlds with Bitcoin, potential value, and plus as a store of value, because it was holding value quite nicely. And then kind of obviously the increase in growth, but obviously Bitcoin really did fail in 2022. 2023 seems an interesting year, what's going to happen, and if the first month is anything to go by, I think we could see some interesting takes on that, and kind of looking at what's going on there. So if we look at, gold, on the other hand, and why we should be buying gold, well, in 2022, basically gold was flat for the year. It was break even, about 1%, while Bitcoin collapsed. So if you wanted stability, then gold would have been a better buy. And I personally like gold just because it's a physical asset. Like I said earlier, I'm not trading the markets. I do a bit of trading on the market, but ultimately I physically hold gold, just because I believe long term there's some massive advantages to it. I'm hedging against any future, let's call it financial chaos that may happen if you look at the worst case scenario. At least I've got physical gold that I can take somewhere. Dare I say, I also carry gold around kind of thing in coin form. So should anything happen, I've got access and stability and mobility there with some finance that's inside the system. Could I take gold anywhere in the world and get it cashed for something? Whereas, if I've got Bitcoin and my wallet gets shut, what could happen there? Well, suddenly now I've lost access to that. So whilst you're kind of getting less return, there is some advantages in physical gold, in coins, small bars, etc., in giving you access that it's always there. Now, obviously, the returns, because it's a physical asset, typically going to be lower, but that may suit you. So it really just depends on kind of what you're doing here. But obviously, there's only so much gold in the world, and obviously you can argue there's only so much Bitcoin. But obviously, Bitcoin now is being affected more and more and more by the actual currency markets and what's going on there in the FX markets. And it only takes a bit of bad news to sort of pushing the market down a little bit. But gold, on the other hand, like I say, has been consistently returning a decent amount. Certainly this early part of this year, we're up 7% in January, so that was a good return. And ultimately, I could see potentially gold hitting $3,000. We're at about high 1800s as a recording here. But certainly if we see things that is kind of political instability, so the war in Ukraine, the whole China-America balloon issue that we saw last week with the weather balloon that's not really a weather balloon. We all know it's not a weather balloon. Don't pretend it is a weather balloon. All that kind of stuff. The more that heats up, there is now becoming more and more. We're never going to have like a World War III, but wars are happening all the time, either economic wars against Russia and all that kind of stuff. Certainly China have changed their policy in how to be friendly with America and the rest of the Western world. That's now changing. We're seeing different things come out of Russia and China that we never used to. You've got other countries that are emerging, like India, that are a powerhouse but haven't really shown their hand yet. Obviously, the Saudis and the oil companies, etc., have a big impact on the gold price, indirectly, not directly, because ultimately anything that's going to move up and down, certainly whilst inflation is high, gold is a good store and a good asset bet, if that makes sense, against inflation. I think certainly it could end up at 3,000 by the end of this year, because if the recession kicks in, then everything else is going to look a lot less appealing, or a lot more opportunistic if you look at it. Obviously, if the economy slows and you can start buying company stock, etc., cheaper, well, then, of course, there's a value there. So you've always just got to look. And it's an age old saying, but I think, spread your risk. Have a bit of everything. I've got a bit of Bitcoin. I've got a bit of gold. I've got company stocks. I've got a bit of everything. But it's all about managing the cycle as to when to buy and sell, to understand when that cycle fits. And certainly, gold has always had a cycle. Bitcoin has a cycle. We've got some foundation series coming out on both of those asset classes. But I think, ultimately, the things that we're seeing with this sort of fiscal policies of interest rate rises, we've pushed almost all the COVID money through the system, but that's left a very big tax bill. And ultimately things like the politics side of it the fiscal stuff takes 3 to 6 months to come through. So just be aware of that. So on the other side of the coin, Bitcoin, could that go to 100,000? Well, there is a case that Bitcoin could reach 100,000 from today's price of kind of 18,000 over the next 5 years. And that's not me saying that, it's Goldman Sachs, which, trust them or not, but, got obviously some clever people there. And if we flash back to sort of January 2022, when the crypto market had not yet imploded, Bitcoin was going up to sort of 43,000. So there was a strong case there that historic data showed it kept going up. And this is the key thing. Now, ultimately, I think the crypto winter, as it was known, was kind of the 2008 moment for the 20 to 30-year-olds who thought they could never lose an investment. They realised that suddenly their Bitcoin holdings or any other digital asset had gone down 30, 60, 80% or even been wiped out, and they couldn't believe that they lost money. So it was a real shock for them. But for us older guys in the room, we kind of realised, no, this has happened before. This is a cycle, hence why we're here. This is an income cycle. It changes over and over. There's a period involved, and the idea is to understand when those cycles are, when to buy, when to not. So, will I be doing some dollar cost averaging on Bitcoin? Certainly I did at the back end of last year. I'll continue to do so because I think long term it is a good bet that it's going to naturally grow because it has done. But also I think as we see mass adoption as part of that cycle, then we're going to start to see Bitcoin or a version of it, whether it be a CBDC, like a digital pound, etc. Been some interesting news came out on that. I think you're going to see that more happening, and that will naturally drive up kind of the industry standard, which is Bitcoin. So it's argued, Goldman Sachs basically saying that gold as a store of value could eventually be displaced by Bitcoin. I'm not sure about that because I think they're two different things for different people. Some of you guys listening may be just traditional and just like, I don't understand digital stuff. I don't want digital stuff. I want property. I want gold. I want stocks. I want physical stuff that I can take. And I know some very wealthy investors that only abide by that rule. I have some other investors that I know who only abide by the other rule, which is I just want kind of digital, upcoming, fast-moving stocks. Shares, coins, that kind of stuff that are exciting, that actually means I take a bigger risk but get a bigger return. So it really depends on who you are and what you're trying to do, rather than trying to follow the news and make that work, but understand whatever asset or investment you're in, what cycle it's in and where you're at, so you're understanding what's going on rather than just sort of leaving it and going, why's it gone down 15% this month or this year? Well, that's because there's part of the cycle that you're in, so just to understand that. So I think in conclusion, by the end of the day, I think it's better, is Bitcoin better than gold to buy right now and in the long term? It really depends on you. Like I say, where your money is, what you're doing with it, what return, where you want to get the return from. If you enjoy the roller coaster world, if that makes sense, you enjoy theme parks and excitement and fun, and you get excited about the risk return of Bitcoin, moving around quite regularly, then, you can make some good money in Bitcoin. You can certainly buy, and do I think long term it's a good long-term play? I'm certainly not looking to liquidate any Bitcoin anytime soon. I think it's something that's going to be around as we move into digital economies, let's call it that Bitcoin is known as the industry kind of standard or the leader. So it's a bit like saying, when it came to anything you can think of out there that's like an industry name that now becomes a way of doing things. So back in the day, I used to sell, believe it or not, vacuum cleaners. They were known back in the day as Hoovers, because Hoover was the brand, and I think Bitcoin is like the brand of digital currency. So I don't think it's going to kind of go anywhere. I don't believe, obviously, that's for the average public, that's what they believe. So all the while that's there, until that gets replaced, I think Bitcoin has got a very long future of where it's going and where it can go. But of course, it's going to go up and down. And like I say, it's hard to argue that over the last 10 years, it's produced 17,000% return. But I think gold can't be underestimated about the longevity, how long it's been there. The tax and laws around it are advantageous if you understand physical gold and what you can do with it, and what you can't do with it, etc. But there is some real value in physical gold because obviously it's a physical asset. And as we move into the sort of scary world of digital for some people, actually gold is a good thing. So really depends on you. That's really the key thing. For me, I do a bit of everything. Of course, I'm a good investor. That's what I've learned over the years, is not to have all your eggs in one basket, the age-old saying. But ultimately, like I say, could it go to 1,000, 100,000 on Bitcoin? Absolutely. Could gold go to 5,000? Absolutely. If you can't look at gold, look at maybe silver, any other precious metal. Copper is going high, all those kind of things. But certainly precious metals are good as well as Bitcoin. So really depends on you, depends on your goal, type of person, timeline, and investment, of course, that you like. You've got to really like the thing you're investing in. Otherwise, what's the point in doing it? So going off to the income cycles extra resource. I looked this year, looked at what we could do, and there was one here that caught my eye, which is an all-in-one place crypto management income tracker. It's called CoinStacks. You'll find that at coinstacks.app. It's a great little app and a website. That means you can track and keep an eye on all your wallets. So if you're into crypto and you've got lots of different wallets like I have, in lots of different places and exchanges. Maybe you've got some NFT, some of you don't even know what that is. Don't worry, if you're into NFTs, you can store them all in one place as well. There's a free version, or it's just a small $9.99 a month. No affiliate link there. Head on over to coinstats.app, and that will make your life a lot easier. Rather than logging into 20 different wallets at once, you can find it all there. So I hope you found this edition useful. I look forward to seeing you in your ears and in your inbox this time next week on Thursday. Stay tuned for more episodes coming up. We've got some great stuff coming up in the Foundation series about gold, about compound interest, etc. And obviously every week we'll be analysing news in the Forex, property and crypto worlds and the FX markets to make sure you're understanding the cycles and benefiting cycles, and ultimately and most importantly ensuring that your money works as hard as you did to get it. My name's Mark Burnham. I look forward to seeing you next week. Take care. Until then, see you soon.
That concludes this edition of Income Cycles. Be sure to tune in each week to hear the best information on how to get income like the professionals do from property, Forex and crypto markets. For more information, please register your free account at incomecycles.com. Once registered, you'll receive our free weekly research roundup email containing links to the very best free trainings, webinars, and guides to making an income like the pros do from markets. If you haven't already, you can subscribe to Income Cycles on iTunes, Spotify, or your podcast platform of choice to have Income Cycles automatically delivered to your mobile device each week, free of charge. You can email questions for the program to ask at incomecycles.com, and we'll answer your questions on the air from time to time in our Ask Us segment. Income Cycles is presented for informational and entertainment purposes only. The information presented on Income Cycles should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Income Cycles are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. Income Cycles, its producers, sponsors, and host Mark Burnham shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on Income Cycles. If you enjoy listening to Income Cycles, why not share it with a friend or colleague? We thank you for your support.